Hey, what is up, everybody? This is Evan Carthy from evancarthy.com. It is April 3rd, Friday, 2020. This is going to be the weekly recap and the next week's preview for the S&P 500 futures and the Dow Jones Industrial Average futures. What we're looking at right now, this is going to be the weekly chart for the E-minis, the S&P 500 futures continuous contract, and this is the weekly chart, and this Fibonacci level right here, what we're looking at, this is a 50 back trade that the S&P 500 futures, S&P 500, the E-minis, it's currently in right here. This is the 50 back line, 50% retracement, even though that's obviously a man-made retracement. It's not a true Fibonacci number. You can see price came back down, hit the 61, and now has found support there for it right there. So if this one is going to be a 50% trade, continuation trade for it, then the exits would be looking at is going to be way up here. Take that off there. It's going to be way up here. Somewhere between about 38.51 and about 39.14. Those would be the target areas to look for from this trade if it goes up and happens from there, but it definitely is a valid setup for it right there. Looking at the daily time frame, there's a couple things to look at. You can see how obviously price has just crashed from the highs up here about 33.90 down to the lows about 21.80 for it. And what's been happening ever since then is price kind of just waffling around for it. So again, price is still kind of in the middle of no man's land for the daily chart, because if you take down the Fibonacci levels from the top right here using that pivot point, you see price just hasn't hit the 50% retracement line to signal that trade. It is pretty close to it, and if it came down and moved off to that exit right there, then that would be a valid trade for sure. But then if you're looking at the long side right here, and if you're looking at the long side right here, it hasn't come back and hit the 50% retracement level. So for both of them, we're just, for the daily chart, we're just in a little bit of no man's land for it. But moving to this quarterly contract for it for the S&P 500, the red box up there, that is just the 50% to 61.8% down to for the short side for it. Let me draw you the Fibonacci extension levels. You see it, you can see it, excuse me, it's going to be from that one right there. And then the blue box right there is just going to be the Fibonacci extension levels going from the long side right there. So those are that's the big resistance area, and this is the big support area down there to look out for. Going down to the 15-minute chart for it, the dotted Fibonacci lines that represents on this chart the 15-minute chart, and what we have right here is we are in a short trade for the 15-minute chart right here. You can see price came back up, hit the 50% Fibonacci retracement trade. So the current exit that we would be looking for this one is somewhere between about 23.76 and about 23.69.50 for that setup right there. If this 15-minute trade setup, 50 back, is going to go to fruition for it. And then on the long side for 15-minute chart, we don't have any currently right there. Now on to the 1-minute chart. We are in a short trade. There's a couple things to look out for. One, we're in another 50 back trade right here to the short side, the extension short, using the extension short setup right here. So for the exit, we'd be looking at for this one about 24.33 to about 24.32 would be the profit target levels for it. And one other thing to look out for it is this black box in the middle right there. Let me turn this on. What it represents is the previous day's 50% to 61.8 level for it. Let me show you what that looks like right there. So this red line right there is the previous day's lows. That's the previous day's highs. Obviously it hasn't been set up for this next day, but I just took the yesterday's highs to yesterday's lows. Excuse me, I think I messed that up. Highs to lows. Okay, yeah, I did mess that up. And there you have it right there. There's yesterday's high to lows, and you see how price has also hit that as resistance level as well. So not only do you have the yesterday's highs to lows, you also have the extension short trade as well. So for beginning next week, what I'm looking for in market opens, I am looking for more more downside coming into the market. That's the setup I'm looking for. And if you're looking for some relief for the long side, we do have that as well. So there will be somewhat of a battle using that swing low and this swing high right here. You can see how price came down, just about touched the 50% level, good enough to get you in for it, and now it's been waffling around ever since. Came up and hit the 50% level the other way for it, plus the 50% box for it right there. So those are the two levels to watch for Monday morning, depending which one breaks and which target is going to be hit from this trade right here. My bias, what I'm looking for, is the downside, just because price typically, since it's also hitting the 50% level, to the 50% to 61.8 to the short side right there, and it's hitting the 50% Fibonacci retracement box from the previous day's highs. I'm looking for more short side to open the market for Monday, and that's going to be what, April 4th, April 6th. Now on to the Dow Jones. We'll start with the continuous contract for it over here on the weekly chart, and similar to the S&P 500, we have a 50%. Remove this off of there, make it a little bit clearer. We have a 50% long setup it is currently in right there. You can see it hit off the 50% perfectly, has found some support there ever since. So if that is going to be a valid, if it is going to go to fruition and hit its target, you're looking at somewhere between about 34,300 to about 35,000 or so. Those would be the profit target levels to look for this long setup that it is currently in the weekly chart. And then going down to the daily chart right here, a little bit no man's land again, kind of like the S&P 500. You can see to the short side, it does have a little bit more to go up here to hit the 50% level. But what is interesting, and what I think is going to happen, of course it may not happen, these are just my opinions based upon my technical analysis, is price come down, hit this 50% level down here at about 23.54, and then comes up, fills its profit target right there, somewhere between about 23.600 to about 23.800-ish, something like that, but enough to get this 50% level and get that to the short side. So that's what I'm looking for in a little bit longer term time frame for the Dow Jones futures. Price come down, hit that 50% level, and then that long to go up and complete, and then find some resistance up here at that next 50% short level for the daily time frame at around 23,800. And then using the, and that was the continuous contract. Here is the quarterly contract, the ones we trade off of. What we have currently for it is, there's the red box again for the daily. That's the 50% to 61.8 Fibonacci retracement level to the short side. And then the blue box right there is the 50% to 61.8 to the long side right there. So those are the major support and resistance areas here on the intraday charts. And then going down to the 15-minute charts, what we have right now, we do have a short setup for the, no, excuse me, we don't have a 15-minute short setup yet. We are currently waiting on a 15-minute short setup. Let me remove previous day high and lows to clean up the chart a little bit. So when it comes up and hits this first green dotted line right there at about 21,442, that would initiate the short setup right there, and that exit would be somewhere between about 20,000 to about 20,000. It's right around there for that setup right there we'd be looking for, because we don't have a long 15-minute setup. We don't have a long 15-minute setup. The black boxes right here again, those are going to be, let me put that back on right there. Those are going to be the previous day's highs and lows right there. If you put, there is, let's see, I think previous day high, previous day low, yeah, right in there. There's a box for it. You can see it hit the 50% and it's using that as some resistance for it. So let's go into the 1 minute box right there. And what we're looking at right here for the one minute time frame is price came up, has hit the 50% level right there, plus it has that 50% retracement box from the previous day's highs and lows. So I'm looking for more downside on the very near term for the Dow Jones. And if it does come down and fulfill its targets, we're looking at about somewhere about 20,580. So you'd have that, plus you have the extension box. That's the 127 to 141 Fibonacci extension box down here. But if you think it's going long, there is a long setup to watch out for right here on the 1 minute chart. See, price came down, hit that 50% level, initiated a long trade to the upside, but it does have a lot to go through to come up and complete that. Doesn't mean it's not going to, but it just has more resistance to the upside than there is resistance to the downside, because it has that 50% short trade right there, and it also has a 50% retracement box from the previous day's highs and lows. So that's why I think, at least for the near term, for the Dow Jones and S&P 500 start of next week, look for more downside to the market. And looking down here at the money flow index right here, this is just a little bit gauge of when the direction of the market is overbought or oversold. I don't use it to trade off of, I just use it to help gauge what to look for when there's been some extreme moves. So here in the 1 minute chart, it's not really doing anything. 15-minute chart, it's starting to get closer to the overbought levels for it. And then here in the daily chart, it's just the middle of no man land right there. But that's the S&P 500 and the Dow Jones Industrial Average futures. That was the recap of April 3rd, 2020, and moving in to Monday, April 6th, 2020. Stay safe out there, and I'll talk to you later. Bye.